Joining me now are the Bad News Bears, Wes Peters and Michael Weiner. Gentlemen, welcome to the broadcast. Thank you for being with us.
Good evening, Brandon.
Hey, good evening, Brandon. How are you?
I'm great, boys. Thank you so much. All right.
Good.
So
Good.
where gold is still hovering over 3,000 an ounce today here. Let's see right now as we're...
Thank you.
Let's see. Yes, as Michael says, we are now at about almost $3,060. Silver at about almost $35, 34 and a half or so right now. So there you go. All right. We don't have a whole lot of articles I want to go through tonight because we have a very, very interesting article that Mr. Peters found. You want to tell us about this before we play it and then talk about it?
Yeah, play it and then we'll talk about it. Yeah, but this is the next coming 2008 financial crash potentially with private equities. This gal was wondering why profitable companies were filing bankruptcy and going out of business, such as Joann's, who 97% of their
Isn't that where you got all your fabrics for all the sewing
pillows? My pillows I make? Yeah.
All your dresses and everything you make?
My curtains? Absolutely.
Did you know that? Yeah. Did you know that Wes is a really good tailor, Logan?
I'm a seamstress.
He embroiders too.
He embroiders?
Yes, he does that.
Cross stitching.
I did crochet when I was a kid.
I was about to ask, do you ever crochet? Really?
I was like 8 years old. I crocheted a little bit.
Yeah. Well, look at that.
I'm gonna knit you a sweater for Christmas. How about that?
So you're really bummed that Joann Fabric is closing. What are you going to do, buddy?
I don't know. I'll figure something out. But anyway,
where are you going to get all your material, your fabrics, and your patterns? Your patterns. Remember when your mom used to lay out all the fabric and get a pattern and cut it and make? My mom. As a kid, I spent hours in what would be the equivalent of Joann Fabrics when I was a kid. You know those big catalogs, they have up on the table, those huge catalogs. I have a twin sister. We would go there and spend hours flipping through those catalogs and playing in all those catalogs where my mother looked through them. And then she'd get a pattern and she'd get the material and she'd go home and she made all kinds of stuff. Very good seamstress.
Knock it out.
Oh, man. She could sew up a storm.
Yeah.
She'd make you she could probably tailor you a suit.
There you go.
So anyway, back to Joann's. Your favorite place is closing?
Yeah, correct. So, but 97% of their stores were profitable.
Well, why then are they closing?
Well, we're about to find out. We're about to find out why it's happening. But with private equity, ticking time bomb.
Wow. All right, here we go then.
Let's roll it.
Researching Hooters getting bankrupted by private equity and ended up uncovering the next 2008 level economic collapse. And they're hiding the bubble inside a private equity black box that makes it almost impossible to see what they're doing. Almost. This time, they're not going to collapse the banks and make it too big to fail. They're going to bankrupt the entire American pension system. I'm almost too afraid to make this video, but it has to be done, so let's get into it. In 2008, investors and bankers were able to crash the world's economy by engaging in risky, unethical bets and investments, and they did it right out in the open. They've learned, and this time they're doing it again. Bigger investments, bigger risks, same playbook, but they're doing it behind the smokescreen of private equity in bigger numbers. They're creating a bigger bubble than before, and it's not somewhere down the road. It's here, and it's about to pop. You see, for the last month, I've been trying to figure out why these companies that private equity had acquired were failing even though they were still succeeding. Joann's, 97% of their stores are still profitable. And yet they're still bankrupt. But they weren't bankrupt a year ago, and they still had the debt that private equity had stacked on them a year ago. So I wanted to know what changed. Now in 2024, private equity bankrupted 110 businesses. And that was almost double their previous record. There had been huge increases in the amount of bankruptcies each year over the past 3 years. But I didn't know what had changed because private equity had held many of these businesses for several years, and they were still succeeding. Until I got my hands on an economic report and an article and found a term that nobody could explain to me. The term was back floating rate loans. I didn't know what that meant, and no article would explain it to me. So I had to go and do research in the financial prospectuses of a bunch of financial investment firms. Guys, in the last few years, private equity has taken out $3.8 trillion in adjustable rate loans. These are adjustable rate loans. These private equity firms took out adjustable rate loans. And so for the last 3 years, as our interest rates have gone up, every 30 to 60 days, the money due on the loans they stacked on top of these companies has gone up every 30 to 60 days. That's why these successful companies that private equity had acquired are suddenly bankrupt, even though they're still making money. They're bankrupt because they're paying adjustable rate loans. But it doesn't stop there. It gets so much worse, because my next question is, why are the banks willing to give these risky loans to these private equity firms knowing it's going to cause them to fail? And the answer is because the banks aren't going to keep them on their books. The banks are immediately repackaging these adjustable rate loans as something called CLOs, right? Which are then packaged and sold off to our pension funds as really great debt. And they tell them that it's a diversified portfolio. Are you hearing The Big Short in real time? Literally, all of these companies are getting bankrupted in greater and greater numbers. And all of this debt is adjustable rate. And all of the bankruptcies are skyrocketing in this direction. Now, if you look at this graph, you can see that aside from 2020, which is obviously an anomaly, right now, private equity, that's the yellow section, has double the highest number of bankruptcies they'd ever had prior to last year. And that number is climbing this year. $3.8 trillion. $3.8 trillion in this debt, okay? I want you to look back to 2008. Do you want to know how many risky adjustable rate mortgages there were? $1.1 trillion. Do you want to know how many subprime but not quite as bad loans there were? $1.3 trillion. That was just in housing. In the $3.8 trillion held by private equity, they own the largest shares of the home ownership market in the United States, but they also own the daycares. They own the veterinary clinics. They own the pet stores. They own the nursing homes. They own the emergency rooms. They own the doctor's offices, the orthodontists. They own the builders. They own the HVAC companies. This isn't just housing. It's going to touch every single industry around us. And that is why, if this were a free market and private equity had not exploitatively gotten involved, if we had a free market and we could see what they were doing, these companies would be succeeding. If this were actually a free market, these companies would be succeeding. Joann's has 97% of their stores profitable. That is an astronomical number. 97% of a retail store is profitable, and they are failing and they are closing every store. And it is further consolidating an already consolidated environment. And now there are thousands and thousands of employees that will not have jobs. And there are thousands of other businesses that are going through the exact same thing right now. And why? Because they know we will never allow the banks to be bailed out again. We would literally riot in the streets. But we're definitely going to allow them to bail out the pensions, because that's our grandparents. That's our parents. That's the working class. They know that this will get bailed out. And because there's no regulatory authority, there are no laws stopping private equity from doing whatever they want, they know they can get away with it, and we can't do anything to stop them. The most important thing you need to understand is this wasn't done by accident. This was done by blatant, intentional greed. The private equity firms wanted the cheapest debt they could get, and they believed arrogantly that the debt would stay cheap forever. They had 0% interest rate loans for ages. And so they took on these adjustable rate notes thinking they could keep refinancing forever out of it. It was arrogant. But it also meant that they got to collect bigger fees because they were taking risky debt that cost less. The bankers were happy to give them because they got higher fees on offering bad debt. They were going to get paid no matter what. At the same time, the private equity firms mandated in their contracts with these companies they acquired that they were advisors and that they were a management company. So they also get paid that way. And then they sold the land out from under these companies and all their assets and made themselves whole before any of this even began. They're already cash positive. The banks knew they wouldn't be held accountable because they were going to bundle it up and pass it off to the pensions. And even the pensions were reckless because they're buying these mechanisms, because when you purchase into private equity, when you purchase private equity debt as a pension, you get to put on your books, especially if you have an underfunded pension, the projected gains for 10 years, which means for 10 years, it looks like that pension is more shored up than it is. And at the end of that 10 years, when it's time for that fund to close out, suddenly then all of the bad debt comes crashing down on the pension. But at that point, there's a new leader on the pension fund and they've kicked the can down the road. So even they were reckless. But at the bottom of all of this is the bankrupting of the fabric of our society. We are losing our businesses. We are losing our doctors. We are losing our orthodontists. We are losing our nursing homes. We are losing our funeral homes. And one by one, they're going to fall under the weight of this really horrible adjustable rate debt. And nobody is talking about it. I could only find 2 articles in very obscure financial magazines that even talk about these back floating rate loans. I have never been more terrified. And I talk about private equity a lot. I have a lot to say. But right now, all I want to do is get someone to pay attention that can make a difference in this, because we have a problem. We're not without any hope at all. Right now, private equity is only allowed to be this exploitative because they exist under something called the carried interest loophole, something that multiple Congresses have tried to close, but private equity continues to bribe politicians to fail to actually achieve. Trump, 3 weeks ago, said he wanted to close the carried interest loophole. I thought he was doing it as a fundraising maneuver, but he's doubled down on it repeatedly. If we can make enough noise about this, maybe we can get him to actually see it through and end private equity's stranglehold on our population. There's so much more that we have to go through, so this is going to be a multi-part series. But if you're new here, my name is Tiffany. We work together to fight private equity and save small businesses in our community, and it's going to take every single one of us to do so. So do all the things and stick around. I'm so glad you're here. Now, anyone that survived the 2008 economic collapse knows that that entire economic disaster was built on the backs of banks giving these incredibly risky adjustable rate mortgages to people that otherwise would not have qualified for these loans. And then they bundled up all of this bad debt and repackaged it and sold it in things called tranches and CDOs. And they bundled them up and sold them to all kinds of other investment mechanisms and built a house of cards on top of them. But they're doing it again. We didn't learn anything. This is going to be a detailed series, but if you're new here, my name is Tiffany. We work together to fight private equity.
All right, there you go. All right, this is absolutely fascinating. I mean, I hope we didn't get too big in the weeds. Let's back up. Can you give me is Michael still with us, or is he frozen?
Right here.
Okay. Can you give me the bullet points, Wes? Give us the Cliff Note private equity firms for dummies Cliff Notes. Go.
Well, private equity are companies that are not traded on the stock market. These are companies like Mitt Romney. He owned Bain Capital back in the 80s. And these private money, this outside money from wealthy people comes in and buys up these companies, and they start slashing all their costs and overhead and trying to make these companies look good on the books so they can turn around and flip them and sell them. And like she said, it's just another form of greed. Like you said, we're not going to allow the taxpayer to bail out the banks again for being irresponsible. So all this money has now funneled into these private equities, and now I know where my Cheddar Bay biscuits are going. From Red Lobster. They're in trouble as well. So it's a Ponzi scheme. It's a shell game, and it's going to be these private equity people that are going to make a fortune, and they've got it over here in the pensions and retirement accounts. And we're not going to let those fail. These people did nothing wrong.
Let's explain how this happens. So the private equity firm goes to Joann's, okay? Tell me how this works, Wes. They go to Joann's and they say what? We will give you a loan to expand and rent more buildings to put in more Joann fabrics? And they do that with adjustable...
Correct. We're gonna invest in your company and grow it, and with the ultimate outcome to sell it at a huge, significant profit. And these people are seeing dollar signs, and they're like, okay, you're going to come in and help us and grow our business, and we can have an exit strategy and make a lot of money. That sounds good to us.
So they say, let's just make up a figure. We're going to show up and we're going to bring $100 million to grow your business so that you become worth more, and then some big company will come along and buy you up, and you guys can all cash out really wealthy. Now, okay, that happens all the time. But the problem is that the private equity firms are doing this on adjustable rate loans. Is that what I'm hearing?
Correct. Absolutely.
So as the mortgage rates went up, that meant the payments on that money that was being borrowed were going up, which started impacting the bottom line and the profitability. But even though Joann Fabrics, 97% of them were profitable, their profitability was being eaten up by maintaining the debt on those adjustable loans, correct?
Exactly. That's exactly what it is.
All right. So to save themselves, Michael Weiner, what are the private equity firms doing? So they're in this spot. The private equity firms saw an opportunity to go to some company. Here's a bunch of money to grow your business, build it up, and then we all sell it, make a bunch of money. But they did it with adjustable rates. Oops, the interest rates shot way up. Now we're paying too much of our profitability on interest payments. So how do the private equity firms protect themselves, Michael?
Well, first of all, the private equity firms don't have to protect themselves. They're a natural winner, everything they do. They're nothing more than a bunch of companies. And who's the number one private equity firm? You know who that is?
No.
It's Blackstone. Blackstone. You heard of Blackstone?
Oh, yes.
They are number one.
There's Blackstone, BlackRock, these kind of groups, right?
Warburg Pincus, there's a bunch of companies. There's Vista Equity. I mean, they're all of them. They never go into a deal and lose. They don't lose. They go in there, they take a good company, they convince them to do the wrong moves, they get in trouble, they pull their profitability out, and the companies like Joann's go under.
Okay, let me stop right there. So you're telling me that when the loans are taken out, the equity firm isn't the one guaranteeing the loan. The one guaranteeing the loan is the company they went in and promised.
That's right. And they get banks involved too. And they get involved with the pension plans of these companies and the retirement plans of these companies. It's horrible. And that's why they're talking about that, because what's going to end up happening is you take a company like Joann's or some other firm, and Blackstone goes in and says, hey, we're going to give you all this money. Well, we don't need the money. Oh, you need it. You need it. We'll convince you. You go in there, they take all this money, and the next thing you know, they got to pay it. What's one of the biggest assets of companies? Their pension plans. So what she's saying in this statement is that they are going to raid the pension plans of these companies, and different than what happened in 2008, which we would never allow again, to allow us to bail out all these banks the way we did. We're not going to let grandma and grandpa and people older than me, 1,000 or 1,500 years old, that legitimately are going to lose their retirement. So the government is going to go in and bail out these 401ks for people who are legitimately, are companies that are legitimately shouldn't have been there in the first place.
Okay, somewhere along the way we missed a step, because we had the private equity firms that come in with money, convince the company to grow and expand. They guarantee the loan. They go to banks to get the loans. The private equity firms wants it because they're going to make profit. The bank wants it because they're going to make more money on fees and profit. But somewhere we missed a step, because you're saying now that to bail it out, you've got to be worried about the pension. But surely it's illegal, Wes, to take someone's pension to pay off your company's bad loans. We missed a step somewhere.
What they're doing, Brandon, just like they did in the housing market, like Countrywide was a huge lender, but prior to the 2008 crash, they bundled up all these loans and sold them to Citibank, to Wells Fargo. They packaged them up and sold them. That's what these private equities are doing. Is they're packaging up all of these loans for through Joann's and all these, and selling them to pension funds and 401ks.
Okay, now there you go.
On the surface, they look like great investments.
That was the missing step. Okay, I want to make sure the audience is keeping up with us. There got to be step by step to explain it. So they were selling, the equity firm were selling these this debt
packages
as packages, but they were selling it as a great investment, and so the pension of some union or some company would come along and buy that package as a potential great opportunity to make a bunch of money, and they buy it. So now the equity firm has sold it. Is that what I'm hearing, Wes?
Exactly.
So the equity firm,
they're looking at it as a long-term investment.
So think of this package as a piece of property. Think of it as a piece of property. You buy a piece of property, and you're gonna build a house, and we're gonna make it great and sell it for a huge profit. But then the mortgage rates go up on an adjustable rate, and now we can't keep up with the payment. So the equity firm comes in and says, "Let's just sell the whole thing as a package to some pension company." And the pension's thinking it's a great deal, buys it, And now your grandparents and parents are going to have a problem when their pension fund is belly up. So that would be an analogy to use, correct?
Yep, exactly. Yep.
But it goes further because this is a setup from day one.
I get that, but we have to explain it in ways that people can understand how the scheme is working.
Because at the end, the pension plans or the retirement programs or the 401ks, whatever they are tied into this. And they will be actually the big loser. And they will be the ones, what she's trying to say in this whole thing is that we're not going to fall into the same thing of bailing out banks again.
Right.
But we'll bail out these pension plans. And this bailout could be bigger than the bailout of banks.
Yeah. Okay.
Yeah, three times.
But 3 times.
3 times bigger.
Okay.
Yep.
So let's go to the pension plans, the pension company. Are we talking pensions for government workers, for public school teachers? Who are we talking?
We could be talking state pensions. We could be talking city pensions,
Federal.
municipalities, federal educational pensions, or we could also be talking 401ks. It's not just one thing. And right now, the reason why Reagan created gold IRAs was because exactly of this, because he wanted people not to own all this paper. And that's exactly why the gold is there, because a lot of companies, if they had their people in gold IRA, and some companies are paying into it now, it'd be a better idea, because all of this garbage paper is exactly what Reagan was trying to protect the American citizens about. There's almost 50 to 60 trillion dollars in pension plans. How many times more is that than what happened in 2008? And Trump sort of smells it. But they have been digging into this. This is not something that just happened last week. It's building to a crescendo right now.
Yeah. And the criminal thing about it, Brandon, is these pension plans are these private equity firms. They will have made their money. They're out. And it's going to be up to the taxpayer again to bail out these pension plans and 401ks.
Do you believe the private equity firms, did they know what they were doing, or were they just greedy and weren't anticipating the interest rates going up? They thought interest rates were always going to stay really, really low.
Totally knew what they were doing.
What do you say, Wes?
Go ahead, Wes.
I think they knew what they're doing. Absolutely. Absolutely.
So they knew interest rates were going to go up and this was going to be a problem?
Yep. I believe so. Yeah. And at the end of the day, all they care about is how much money are we making? And those people will be out all right in the end because, the government's going to step in and bail them out. They just look for the same thing happened in the mortgage industry. And the whole reason that they went this route was because, again, they knew that the American people were not going to accept a bailout. There was going to be a bail-in, and people that banked at those institutions were going to be the ones to take the haircut.
So when you say that this happened with Fannie Mae and Freddie Mac, right?
Yes, absolutely.
So the government came in and bailed them out. The government came in and bailed them out, but the people that were doing the closing, the banks, the closing, the title companies, they all made their money, and then and then these loans from Fannie Mae and Freddie Mac of people who should have never gotten a house because they could have never qualified for it. They should have never. But the government, I think that was during the Clinton years, forced these companies to offer loans to people to buy homes they could not afford. But when the banks and the title companies, and the builders and everybody got done, they had their money. But it was all sitting over here being financed by Fannie Mae and Freddie Mac, which is government, right? Quasi-government. So the government just ends up bailing out a government institution, but all the friends and all the, quote, business people of the politicians, they all made their money.
Yeah.
TARP went on.
What's that, Michael?
Go ahead, Mike.
I was saying TARP. I think I told you a long time ago, the people at the top have no clue in government about money. So when TARP was going on, if you remember under Bush, they started handing out TARP money, and the bank that adjudicated it was Mellon Bank. And I told you, my son, who was a lawyer, was working for them in that department. I went to see him in Los Angeles. There were 2 guys with blue suits and guns standing by an office. And I said, "What's that?" And he says, they're giving TARP money out on the computer on them in that office. Hundreds of millions of dollars are being transferred to banks. It's amazing.
Well, why would you need two guys in suits with guns for money transferred over bank?
To make sure nobody else could go on that computer except an authorized person, because that was directly connected to the Fed. Money moving out of the government. That's why.
And back when this was going on in the housing industry, where if you could fog a mirror, they'd give you a $250,000, $300,000 loan to buy a house.
If you could fog a mirror.
But if you could fog a mirror, yeah.
If you're breathing.
And we saw it firsthand here in Arizona. West of here, there's a Del Webb community, family community. They were building out there, and there would be investors come from California, and on phase one, they would buy 10 lots and put down the down payment for 10 homes. And by the third phase, the final phase of that neighborhood, if you drove through those neighborhoods when they were finished being built, every house had a for sale sign on it. And if you got in on phase one, when you were selling your house in phase three, you were making about $60,000, $70,000 of profit, never making a payment on the thing. And I had a friend that I went to high school with. We were best friends growing up, and he had a pretty good mortgage company here in Arizona, and they were just killing it, doing tons of loans. And as soon as they did those loans, he had a team that all they did was bundle up all those loans and sell them to Citibank, bundle them up and sell them to Countrywide. And they wouldn't hold those loans. They'd sell them, they'd make their money, and boom, give them off to somebody else. So,
and then the government did the government come along and bail those banks out?
Oh yeah, absolutely. Absolutely. They all got bailed out. Mm-hmm. Yep. They all got bailed out.
All right. So then she says, now the concern is this is your orthodontist office. This is your HVAC. Now, what does she mean by that? Because I do know, if you guys will Google it, Logan, maybe somebody in there can Google this. HVAC owners becoming multimillionaires. HVAC. HVAC. HVAC owners becoming multimillionaires. Plumbers becoming multimillionaires. I'm reading stories where people that have worked building their HVAC business, heating, air, or plumbing business, they're now selling their businesses for $1 million or more to an equity firm. And they're cashing out as now a millionaire. Or, maybe some of them are selling for more than $1 million. So right. Is this what she's talking about when she says this is tied in to our HVAC companies, our orthodontists? Are they being bought up by equity firms, and then equity firms are selling this to pensions as investments?
Correct. Yes. And a lot of these industries and vocations as well, again, you get in a situation where your business is being profitable, but you have a building that you financed on a 5-year arm or something, and those interest rates are jumping like crazy. These people are getting in these positions where they, like we said, they can't afford the payments. And a lot of these buildings, if they want to refinance them, they won't qualify because the property value's gone down.
All right, here it is. So, I had to find it myself. Here I found it. Private equity is taking on the skilled trades. Okay? October 2024. Private equity firms have been increasingly targeting skilled trade companies like heating, ventilation, and air conditioning, plumbing, and electrical businesses for acquisition and consolidation in recent years. Okay? And you go read some of these articles, you'll find out of these people, that own these companies and been running them themselves, family businesses for years, are grabbing them up, or are having them grabbed up and bought by these equity firms. So that's why she says, wait a minute, this isn't going to just impact some retail store. This is going to impact your HVAC companies. This is going to impact your plumbers. This is going to impact your orthodontists. Because I'm assuming what these companies are doing, and come back to us guys, is that they are going around the equity firms and they're buying up other, orthodontist offices too, probably. I mean, whatever she mentioned, they must be going around buying these up. Right. Then when they buy them up, I guess I'm to assume that they then sell them, and they sell them to pensions. And some of these pensions are got billions of dollars in their pensions. That's how they have the money to acquire these things, right?
Yep. Colleges, endowment programs, absolutely. Yep.
Don't you remember that movie Wall Street when they talked about the airline company that Bud's father had? And they talked about where they were going to get the money for it all, right out of the pension plan. And what was Gordon Gekko? Private equity guy.
And again,
There you
the
go.
problem comes that when these pensions buy these packages, they're financed on adjustable loans, correct?
Correct.
So as the interest rates go
Bingo.
up, the packages are no longer cash flow profitable businesses. They're now
Right.
businesses that are in distress.
Upside down. Yep, absolutely. So,
Yep.
So when do you think this is going to pop?
Well, I think
big unknown.
I think that Trump's going to expose it. I
Well-
think it's going to come up by the government. I think Basant and the rest of them are going to expose it. I think it's going to come out because the Pension Guarantee Trust guarantees pension plans. And when you see one pension plan tumbling, it's going to be a domino effect. And the government's either watching it now or not. We know that Biden didn't watch it. Couldn't even watch his shoes. But it's going to come to a head one way or the other. And I would assume this administration, who's paying attention to the numbers, are going to see it. That's what she said in one of her in this. Trump has been doubling down on this. He's watching it.
He's watching the carried interest loophole, she said.
Correct.
and that's where instead of paying like a regular ordinary income of up to 37%, they're paying a much lower capital gain tax at 15 to 20%. So they play with the numbers, and they're paying a much lower rate of tax. They're only paying 20%.
You're
on
talking
these
about the pensions.
billions
So
of dollars.
you're saying the pensions can pay less tax, which is why this is partly attractive to them.
Correct. And the
And they
private equity also.
And private equity knows,
funds.
on a Tuesday night at 6:30 when they put a guy who's 70 years old retiring from some podunk company and sits there and says, "I've lost all my pension. The government hasn't covered me," or what are they going to do? What do you think is going to happen? The empathy is going to be like crazy, and the government's going to back it up. That's what she's saying right there. That's the loophole. The private equity firms know that the backup that they have is the government is not going to let this little guy who's a lot younger than me, he's 70, I'm 170, and at the end of the day, he is going to go on TV and cry that he has no pension, and the government's going to come in to save him.
Okay, but some of these private equity firms have already sold, so they have no liability. They've already walked away. They've taken their profit. The whole thing is sitting, in some cases, right, Wes, with the pensions alone. So
Correct.
when those pensions go bankrupt because they've got too many bad debts that they've taken on, too many packages or businesses that they have taken on that are not profitable, so they can't fund their pension and keep paying out their people, the government's going to go in and step in and bail out those pensions. Now, here's the problem, obviously. I'm sorry, but that's not my problem. I don't have a pension, okay? I was 19 years old when a financial planner tried to sell me a, 401k or whatever they called them back then. I don't know if in 1989 they were calling them, or 1988 they were calling them 401ks or not. Were they, guys, in 1988? Were they calling them that?
Yeah.
He tried
they were
to
401ks.
Okay, he was trying to sell me something like that. And I said, no. And he said, why? And I said, because when the government and everybody goes kaput, how do I know I'm going to get my money? You're asking me to take my money and put it in something where someone's going to take it and invest it in all these other things, and I'm going to make this return. I think I can make a better return on my own money, number one. Number two, I can control the decisions that are made so that I can have a better chance of making sure the decisions I make are profitable decisions. I give this money to your 401k, your guy goes out and invests it, he loses it all. Or the economy turns and the market turns, and all of a sudden there's very little there anymore. And now I'm like, I should have invested that in my own business. I should have invested in my own life. And I said, I'm not interested. I was 19. I've never had a 401k. I've never owned a mutual fund. I've never owned any of this garbage. because I always invested in my own companies, whether it was my commercial cleaning company that I started and owned, whether it was starting up Worldview Weekend Publishing and telling the two big publishers I was with, one of them had bookstores all over the country. I finally realized I'm selling more books than they are. Why am I giving you 90% of the profit when I'm the one writing the book and selling 90% of them? I don't need you anymore. I have a radio show and TV show and my own distribution outlet. And I took my capital, invested in publishing. Then I took my capital and I invested in television production and filming all my Worldview Weekends and producing all my own documentaries and being my own publishing house and my own television house. And I guarantee you, I've gotten a much better return than the stupid morons that would have been managing that 401k. Now, with all that said, I'm now 56 next month. When I was 19, I chose not to play that game. So guess what? I have zero empathy for your grandfather or your grandmother because they took the risk. They should have known what I knew at 19. And I'm not doing that. There's too much risk. There's not enough control. I have no idea who's moving the money around, where they're putting it, what they're doing. I trust myself, not them. They took the risk. If they get burned, I'm sorry. I'm sorry, but you knew the risk. So here's the deal. If you made a fortune, would you end up giving me a percentage? No. So if you lose it all, why should I, through my tax dollars or the inflation of my money now being decreased in its value and its purchasing power, have to pay 1 red cent because you made a dumb decision?
But I agree with you, but what do we do for the viewers out there that are watching this tonight? And my advice and Wes's advice is very simple. If you're 59 and a half years old, or you control your own retirement plan through your company, you have access to it. If you're over 59 and a half years old, you should start protecting some of your 401k and some of your pension while you can. You can do it after 59 and a half years of age, and you can do what President Reagan offered you protection was, putting it in something physical in gold, not in any more of this paper. We have a lot of people who are smart enough to do that, and they are feeling very self-reliant today and arm's length from this type of minutia.
I agree with that 100%. 100%. Wes, though, how many Americans are going to be in favor of bailing out these pensions? Or how many of them are going to be like me that say, I never took part in that. I saw the danger and the risk in that at 19, and I'm 56 and I want nothing to do with it. And don't you dare devalue my currency and my purchasing power for other people. I'm tired of people thinking we owe to bail somebody out. What percentage of Americans are into this? In other words, are we a minority? Are you in a pension? Do you have money in a pension?
No.
All right. So how many people are like you and me? What percentage of Americans?
Maybe 20. I would guess 20% would be high, probably.
So you're saying 80% of the
vast
people
majority
in the
of
country
people have pension, may not have pensions, but they have 401ks. Absolutely.
And they didn't diversify enough so that if they lose it, they're offsetting it somewhere else.
Yeah. So, pensions are becoming a thing of the past.
Why
obviously.
the politicians will bail it out, because 80% of the voters are gonna scream for it.
Yep.
And that's why we're a socialist country. I don't give a rat's patoot who's in the White House. We are a socialist country, okay? People can tell you all day long we're free market. We're not. We are a corporate fascist system. It is a form of socialism, big government, big business, and they cater to the politicians who know where their bread is buttered by the voter and by the corporations. And the people that sail their own ships can just pound sand.
Yep.
And that's you and me, Wes.
Yep. Well, it's these pensions, retirement accounts start going down. I think the vast majority of people that have money in those types of plans are going to be saying, heck yeah, I didn't do anything wrong. We need bailed out. You bailed out the car companies. You bailed out the banks. It's time for you to bail out these pensions. And maybe this time around, you hold someone accountable that made this whole fiasco.
No one will be held accountable. No one is ever held accountable. Never. And I get it that the people with these pensions are like, hey, I didn't make this decision. I didn't do this. And now I'm damaged. I get it. But the problem is we let corporations and financial houses do things they should have gone to prison for a long time ago. The free market system is not perfect. But the problem is when you have over-regulation and then too little regulation. And clearly we have had too little regulation here that they could get away with doing this.
Yeah, absolutely. Yeah, there's little to no regulation in this private equity side of things.
Well,
and that's what some people are concerned about.
You know what? And then it goes back to what Mike Brady taught us when Greg Brady bought a clunker of a car. Buyer beware. And I think he said it in Latin. Buyer beware. Okay? So I learned it as an elementary student watching the Brady Bunch. Buyer beware, Greg. You bought a clunker for $100 or whatever it was. Remember that one?
Right. Yeah.
You do, don't you?
I do.
Of course you do.
I used to watch the Brady Bunch.
Of course you did. You had a crush on Marcia, like every red-blooded American man. So
I don't know about that.
You don't know about that? All right. It was probably Jan. You're probably more of a Jan guy. But the bottom line is, if Americans would take responsibility for their own financial house, they could be diversified enough not to be always the one who gets taken.
Right.
And what you're saying right now is, if I'm hearing you correctly, people that better pull the parachute right now. If you had, let's say you had $250,000 in your pension or $500,000 in your pension after working for 30 years, Wes, and you heard tonight what you heard, what would you do?
Well, if they would let me get my hands on it, I would be definitely taking a good chunk of it out of there. And seeing, or at least seeing if I could roll it over, with no taxes or penalties, or even if there is taxes, if you're over 59 and a half, taxes are only going to go up. Consider pulling it out. I'm not a tax expert. I don't give tax advice, but I would be finding out what your options are.
But you know what? Paying tax and being left with something is better than paying no tax and losing everything, in my opinion. Michael?
Right.
I totally agree. That's why Reagan did all this. That's why they created precious metals IRAs. It puts you in control. Reagan was a guy who always felt that the government was the problem, not the solution. And he always felt that the people running the government had sticky fingers. I mean, he got to know Biden and all those guys just when they were just building up their nest eggs of wealth over our money. And the bottom line is they just keep building up and building up and building up. And the only thing you can do if you want to retire and sleep at night is put part of your retirement into gold where you don't have to worry about it going to zero and you don't have to answer to anybody because possession is 9/10 of the law.
So right now, let's say someone's watching and they have a pension. I don't give financial advice, I give financial opinion, just for that.
Let's say retirement.
Well, okay, let's say someone's got a pension, okay? They got this retirement account, their pension, right?
401k.
Right.
But it's all the above, right?
Mm-hmm.
All the above.
Correct.
Yeah.
What are you saying?
Any type.
Yeah?
No, I was just going to say any type of retirement account, 401k, IRA, pension, all the above.
So if you know what you're hearing now, what percentage of that would you be pulling out and diversifying? Wes?
Myself personally, I'd be looking at like 50% based on the time we're living in right now. People always ask that question, what do you typically put into precious metals, 10 to 20% of your net worth. But we're not living in normal times. I believe in diversification, but how long have you heard me say, Brandon, it's time to get some of your hard-earned money outside of the traditional banking system and outside of the US dollar. Digital currency is coming. You do not own your money in the banks. You need to get something out of the system. And, I'm a big precious metals guy, obviously. I've been buying it for over 20 years. I buy every year. I buy a couple times a year. I dollar cost average, just like you have. And, these financial institutions own your money. I just talked about it last week on the show. Bank refused to wire a lady's $120,000 unless she showed them an invoice. They needed to see specifically what she was buying. These financial institutions, when things start going in the tank, pack a lunch when you call Raymond James, Edward Jones, Schwab, Fidelity, whoever, and be prepared to wait on hold to talk to a live human being to try and do something with your money at that point in time. You need to be proactive. But at the end of the day, people need to do a dollar amount they're comfortable with, Brandon. Whatever that amount might be, if it's 10% or if it's 50, 60%, that's totally up to them. But one thing I wouldn't rely on is talking to my financial advisor, because your financial advisor is going to tell you you're crazy. Everything's going to be fine. This is the great old USA. It's going to bounce back. It's going to come back. Your financial advisor has never gone through a period of time like this.
Well,
ever.
they didn't tell you to look out for 2008 and be ready for that, did he?
No.
And
They don't
again,
manage
what
your
we're
money.
talking about is the ability to take some of your retirement, like your IRA, and put it into physical precious metals that is actually physically somewhere in a vault with no liability against it, right?
Absolutely. And if they don't like the idea of it being in a vault, then your other option is to pull it out, pay the taxes. If you're over 59 and a half, that's an option, because again, taxes are only going to go up. Liquidate whatever amount from that retirement account, pay the taxes now, and buy gold and silver privately, and get that wealth completely off the government's radar, off the grid. Because you can buy gold and silver. That all we need to know from you, we don't need a date of birth, social security number. Where do you want us to send this stuff to?
But not only off the grid, your gold is now not dependent upon collapsing due to someone's poor financial mismanagement with private equity firms and adjustable rates, et cetera, et cetera. It is a universal asset that has historically gone up. And I mean, look at where it was in the 80s, right? What was it at? 800 an ounce? Now we're at 3,050 bucks an ounce?
Well, and you have people that are normally Wall Street stock and mutual fund cheerleaders talking about gold being up another $500 an ounce by the third quarter of this year.
Yep.
We've
Well,
got a full-blown trade war about to start here that's already in process.
so other than this gal, we're going to come back to this, but other than this gal, no one else is really talking about what we talked about tonight?
No, when I came across this, I was like, wow, this is powerful. And I started looking into her, and she's been a big advocate for small businesses. And again, she started noticing, why are there so many of these companies failing? And she started digging into it and came across Joann's. If 97% of their stores are profitable, why are they failing?
Well, there you go.
And she started digging into it. So, yeah.
All right, get your free packet, no obligation. We don't give financial advice. I get financial opinion. My opinion is do your due diligence. Get the free pack. How do you do that? We got a new website, worldviewgold.com. Go to worldviewgold.com right here, folks. Fill out the form. Click more information. Fill out the form, and it will go to Wes, and he will send you that no risk or free, no obligation packet. Free, no obligation packet. Worldviewgold.com. Worldviewgold.com. Thank you, gentlemen.
Thanks, Brandon. Have a good evening.
You too, my friends.
Good evening. Bye-bye.
All right, that was a very important interview. All right, now before I go to Senator Bob Hall, remember, get your free pack of business cards. We're now approaching 10,000 of these business cards that have been sent out. You guys asked for them. Say, hey, can we have business cards we can pass out to our family and friends? And we said, sure. So we printed some. Never expected this response. In 6 weeks or less, we've now sent out 10,000. A pack of 20, they're absolutely free. Worldviewstore.com, worldviewstore.com. Check that out if you would, worldviewstore.com. In fact, and we'll send you. If you run out of the 20, you give them all away, order some more. While you're there at worldviewstore.com, check this out. Look at this. Our national conference is coming up. October 3rd and 4th, Friday night, all day Saturday. Gordon Chang, Sidney Powell, Dr. Lana, Chris Martinson, Mark Mitchell of Rasmussen, Alex Newman, myself. It's our 22nd annual national conference. We moved it to the Mid-South. We're going to save money by doing that, so we pass the savings on to you. Tickets are only $99. Now, the kicker is we rented a theater, beautiful theater, here in Collierville. Nice, middle-class, safe community. And all the hotel information and everything is right there on the website. So I urge you to go ahead and book your hotel while you can, before some soccer tournament comes to town and takes it all up. But here's the kicker. We only got 350 seats. Only 350 seats. So if you want to attend, you should go ahead and register now, because I can't promise you how long That's going to last with 100 seats already gone. Okay? And if you're a Vault member, you can stay at home if you want to and watch it as a Vault member. But otherwise, worldviewstore.com.